Hey everyone, welcome back to Corporate Decoder. Today we're diving into a filing from Bain Capital Specialty Finance, and trust me, it's more exciting than it sounds. Okay, maybe a little less exciting than a summer blockbuster, but stick with me. In this video, we'll uncover what happened at their annual meeting, why they had to postpone a key vote, and what it all means for the company. If you're all about decoding financial filings, make sure you're subscribed. We also have a Discord community linked in the description below, where you can discuss all things finance with fellow enthusiasts. So Bain Capital Specialty Finance had their annual meeting on May in 2025, but they had to stop it and reschedule it. It's like planning a party and realizing you forgot the cake. The meeting was then held again on June 12, 2025. The main thing they wanted to vote on was something super important: whether to keep allowing the company to sell shares of its stock for less than what those shares are actually worth, called net asset value. It sounds confusing, but don't worry, we will clarify. When a company sells shares below net asset value, it's like putting things on sale. Now, why would a company do that? Sometimes it's to raise money quickly, even if it means getting less money for each share than it's really worth. Imagine you have a bunch of cookies to sell and each cookie costs $1 to make. Selling them for 80 cents each will get you some money quickly, but you're losing 20 cents on each cookie. The problem is that shareholders don't always like this because it can lower the value of the shares they already own. It can be like a restaurant diluting its soup. It becomes less valuable if you do that. Because this topic could upset some shareholders, there was concern that people might not be happy, so the company decided to ask the shareholders to vote on whether to stop the meeting for the day and continue it later on in order to give more time to convince people and get more yes votes, basically to allow more time to persuade shareholders to agree with the company's plan. At the initial annual meeting, one thing did get approved though: the election of certain board members. This just means they voted on who gets to be on the company's board of directors, like choosing team captains for a sports team. So the vote on whether to delay the meeting to get more of the votes they wanted was officially called Proposal 3. Now let's look at the results of the actual vote on whether to delay. Here's the interesting thing: 24,973,295 votes were in favor of moving the annual meeting, and 10,355,571 people voted against it, with 445,007 one people as my man and the Sani voters with more yes votes. Broker non-votes are listed as not applicable. This happens when brokers holding shares for clients don't get instructions on how to vote and therefore don't vote on certain proposals. Because they voted yes to giving themselves extra time to convince people, the company postponed the vote on selling shares below net asset value. It's like saying, okay, we need more time to get everyone on board with this idea. They're going to try again at a second meeting on July. If you were a shareholder, the good news is that if you voted at the first meeting or provided a proxy, you don't need to vote again unless you changed your mind. A proxy is when you give someone else the power to vote for you, like sending a friend to vote in your place. The company's record date is still April. This is the date they look at to figure out who is allowed to vote. Now, let's step back and look at the bigger picture. Bain Capital Specialty Finance is in the business of lending money to other companies, especially those that might not be able to get loans from regular banks. This is boilerplate legal language, basically saying that the person signing on behalf of the company is authorized to do so. So what's the verdict? The company needed to postpone the vote because of a high possibility the measure wouldn't pass, so they are trying to get more yes votes with extra time. The biggest risk for this company comes with its ability to get shareholder support. It may find that some of its plans get blocked. I believe that given recent performance trends, it becomes harder to pass shareholder votes, and Bain Capital Specialty Finance needs to take shareholder sentiment into account when determining the company's strategy to avoid issues like what we saw with June's vote that had to be postponed. Alright, that's our breakdown of Bain Capital Specialty Finance's latest filing. What's your take on these events and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.